All right, we begin in Nigeria, where the Supreme Court has ordered a suspension of the deadline for the swapping of old to new Naira notes by the Central Bank of Nigeria. The Supreme Court issued an interim injunction restraining the federal government from suspending the acceptance of the old Naira notes on the Friday, February the 10th, 2023 deadline. Kaduna, Zamfara, Kogi State have dragged the federal government to the Supreme Court over the scarcity of old and new Naira notes due to the CBN redesign policy. The state governments, those three, said they were worried about the effects that the CBN Naira redesign policy is having on the residents of their states. Consequently, they're seeking a restraining order by the Supreme Court to compel the government and the CBN from implementing the policy, and that, of course, has now been granted. So that's the breaking news coming in on the wires right now. We stay in Nigeria and look now to the stock market, look at the Nigerian Stock Exchange, particularly Geregu Power PLC, having one of the highest trading volumes as the markets closed yesterday, February the 7th of 2023. Now, let's take a look at those volumes as we look at the Geregu, the volumes from yesterday. All right, so yes, 21.1 million shares that were traded yesterday, one of the highest volumes on the exchange yesterday. And we're going to be taking a look at Geregu in particular because the meteoric rise of this particular stock has caught the attention of a number of analysts. Now, for those that don't know, let's take a refresher of the stock as far as when its listing took place. So it's on the main board. It's in utilities. The subsector is the electric power generation. Nature of the business, of course, power generation. Let's also take a look at some more information on the stock as far as when it was listed. October the 5th, 2022, 100 Naira per share, coming out, of course, to the 250 billion Naira market cap. And then that's where things get pretty interesting with the stock. As at yesterday, 207 Naira per share. So far this year, one of the highest appreciations we've seen, one of the best performing stocks on the exchange, a 47% appreciation. Since the stock was listed on the exchange in October of last year, it's up by 108%. The market cap at 519.75 billion Naira. And in fact, between January the 26th to February the 2nd, the stock appreciated by 61%. It's 61% appreciation in one particular week. So it's an incredibly meteoric rise. So we're going to talk about this particular stock as well as the power generation sector. Bringing in Patrick Atuanya, who is a publisher, MoneyCentral Media Ltd. That wrote an article about the stock. And also, we've got Muktar Muhammad, CEO Finance with Muktar. Muktar, very welcome. Thank you so much for joining us.
Thank you.
Patrick, thanks for joining us as well. So, Patrick, it's your article that's been, I don't know if I say going viral. I have people talking about the stock. Let me start with you. What do you make of this meteoric rise of the Geregu Power PLC on the NGX?
Thank you so much, Roders. We don't think the rise in the stock is supported by fundamentals of the business or of the company, actually. And you should also know that Nigeria is a long-only market, so there's no way to short the stock. And it also has a very tiny float. So if a little if you put in a buy order, then the stock can go pretty high, with a little bit of buy order. So we don't think it's supported by fundamentals, and because of the tiny float and because of where the profits, what's happening with the profits.
Thanks, Patrick. Muktar, what do you make of the rise in the stock? We talk about the stock exchange with you all the time. So, what do you make? I mean, it's pretty incredible.
Yes, that what you should ask me, do I have Geregu?
Okay, do you own this stock?
I don't own this stock.
Why? How could you not? Okay, why? Okay.
So definitely, he said it all. You need a particular volume to move a stock, about 100,000 units. And if I put 100,000 units at that amount, I want to buy that particular stock, and I put a particular price. Somebody has to put a higher bid. The market will have both bid and offer. So now the bid could be higher than the offer. So definitely what we're seeing there is that the bid at the price and nobody is ready to buy at that price, or when they normally, what you see in Geregu, what has been happening is what we call, sometimes you just see particular people crossing the stock to particular people.
Right. So like me and you making an arrangement that you will buy my shares from me.
Which is technically is okay, you know, technically is okay. Now, the only way that you can say the exchange should come in is to look up who are those people that are buying these stocks. Are they parts of the board of the company? Are they the ones that are buying it? But outside of that, they have not done anything wrong. It's they are the one buying it at a particular price, giving somebody at a particular price. So there's nothing wrong with it. But again, when he's talking about fundamentals, as you look at the fundamentals of that company as it stands now, you could say the fundamentals is not very strong, but not everybody buys stock based on today's fundamentals.
Okay.
People look at the futuristic fundamental of the stock. Let me give you, people look at Airtel. Airtel Africa was listed at about 800 to 1,000.
Yeah.
MTN was listed to about 200. I mean, so now look at the difference in terms of price. And then when you look at the profitability of MTA compared to Airtel, you realize that MTA is making more profit than Airtel. But yet Airtel looks more expensive now. MTN came and they did introduction by introduction, which means a lot of Nigerians are able to trade on MTN shares. But Airtel stock, as it stands now, are traded by those that they are initial investors. They've not done anything by introduction, and you cannot buy more than a particular unit that is available. So all these are technicalities that actually, you know, in law they will say, maybe in the law court you said he won the case based on technicality. So definitely that's what is playing out in the market. It's not that there's any foul play as regard the stock. And you remember, cash is key at this time, and a stock that is just listed in October and is paying people dividend of 8 naira at this moment. But when you look at that, we're going into deep technicality. That's when you say a stockbroker will look at it and say, look, how should I buy this stock at 8 naira? If I look at the earning per share, or look at the percentage earning per ratio too, I realize that, oh man, it's looking very expensive. But some people are looking at the future and say, look, I have to buy this stock now because it's a power company. They are trying to buy, they will go into not only distribution, they want to also go into generation. So you look at all these features and begin to factor it in.
Okay, well, I'm glad you mentioned that, because we want to get to that whole power, the generation and so on. Patrick, Muktar mentioned the dividend, and of course, they've made a dividend announcement, 8 naira per share. I think the qualification date is February the 27th. Can one make an argument that that's also, I guess, putting some, you know, a tailwind for the stock as far as the dividend offer?
Not really. When a company declares dividend, what you have to look at is the dividend yield. And Geregu right now trading at 207 naira as of yesterday. 8 naira dividend, that comes to about 3.8% dividend yield. So it's not really attractive, you know, compared to some other stocks that trade around 12, 13% dividend yield. So I don't think that the 8 naira dividend is a justification for the rally in the stock, because I wouldn't touch it for 3.8%. I mean, inflation is around 20%. So why will you buy a stock that's paying you 3.8%?
All right, now I want to get to the price earnings ratio. I'm trying not to get too technical here for our viewers, but if we price earnings, I think we have the formula where you divide the stock price by the earnings per share. So this is just part of the fundamentals as far as dividing your price, the share price by the earnings per share. Now let's take a look at the price earnings ratio. I think this is a trailing 12 months for Geregu compared to its peers in, I think, India, Italy, and Brazil, a couple of other price earnings ratios of some other companies. So I think Geregu is trading at about 52 times its earnings, and is which is quite substantial when you compare it to its peers. I'm hoping we have that table up. But Pat, is that, I mean, with that type of price earnings ratio, does that set off alarm bells, or is that just, do we just say that that's because of the appreciation of the stock?
Okay, so yeah, so the price earnings ratio went up because the stock has gone up and the earnings has gone down. Right, so the earnings is down 50%, and the stock is up about 50 something or 60%. In the past year, like you said. So if a company is growing, right? Remember tech stocks like Tesla, Amazon, at the point they were trading around 70 times earnings, 80 times earnings, right? Because they're growing their earnings so fast that the market has to give a high multiple to keep up with the earnings so that they don't lose out on the appreciation that's going to come. But when a company's earnings are going down and the multiple is so high, then it's something to bring alarm bells, like you said. And another point is you also have to look at the industry, right? Geregu Power is highly regulated. Their tariffs are highly regulated. The government actually sets how much tariff they can charge. So there's a cap to how much money they can really make, right? So maybe they generate 1,000 megawatts, they charge a certain amount set by the government per megawatt hour that they send out to TCN. And that's the cap. That's how much they can make, right? They can't really, innovate like a Tesla and, bring in new products to the market so that the market can reward them with a higher multiple. So that's why utilities all over the world trade at a very subdued valuations between 10 and 20 times earnings because it's just a steady, slow, boring business. And you don't want it to be too exciting, right? Remember what happened with Enron in the US, right? When they started getting into derivatives and other stuff, and they blew up. And when they blow up, millions of people will not be able to get power. So that's why governments around the world, they regulate utilities, to keep them, steady and stable. So they have stable earnings, and they should not be trading such high valuations.
Thanks, Pat. Muktar, let me bring in. How to compare the power generation for each of those nations? And just to be fair to Nigeria, we're using the generation capacity, 22,000 megawatts. That's capacity, not what we've actually. Yeah. Now, if you compare that to your Thailand, which I think is it 41 gigawatts, your Italy, your India. As far as power generation, they are way okay. So here we go. So Italy 118 gigawatts, and again for our viewers, 1,000 megawatts gives you 1 gigawatt, right? And Nigeria is at 22. Actually, Nigeria is actually at 22 megawatts, not gigawatts. But again, using that, as Pat has said, within the industry they play in, and with those type of multiples, those PE multiples.
Well, if you look at that, when you look at Italy, look at India, you look at Thailand. You realize that those are markets that are already saturated. Then when you look at Nigeria no more looks like a virgin market.
Yeah.
Remember, there is room for more generation. It's not just that Geregu is going to generate just 1,000. So when he's talking about product, they could also be thinking of generating more. They could also be thinking of buying some of the generation plant from the government, not just them generating alone. They could also be thinking of upping that. Remember that we see that in Transcorp. Transcorp is also into power generation and other sector, and they have been trying to improve their generation every year to meet up with this thing. So when you look at that side of the business, you think it's a profitable business. But when you look at the earning per share, which for me is what you use to pay your dividends,
right,
then you begin to have a problem that you are making a lot of losses. So where do you get this money to begin to pay dividends now? So when you are a company that is futuristic, you don't tend to want to be paying dividends. You try to reinvest those dividends, especially when you are in a business that is capital intensive. So you want to have more cash instead of you borrowing from banks. So whatever profit you make, you want to put it back into the business.
Yeah.
So that's where I have a problem with them. Let's give an instance. For a long time, a company like Apple was not paying dividend to its investors.
Right.
So they were busy reinvesting that money, But what the investors were enjoying was what we call capital appreciation.
Yeah.
Now, in this case, they are seeing a company that is actually doing losses and yet finding a way to pay dividends. So in the short term, that's what we talk about comparable analysis. In the short term, it looks good for investors because you're looking at 3.8%. Where I don't want to agree with is, every investor has his own model operandi.
Okay.
Some of them will say, look, I treasury bill amount that they're giving me. If I can get it, I must have bought it at 100 naira, and I'm getting a dividend yield of 3.something%. Calculate with my capital appreciation. I've made a kill. I've been able to go above inflation. you don't just calculate a stock in isolation when it comes to where the person is or where the future purpose of those stocks. So definitely when you look at that context, you say, no, you don't have to say investors some investors will not even be ready to take the dividend. They have made so much capital appreciation. So they might or even crash out. But my main challenge is going forward, it doesn't look exciting. Even if you have to come up with a lot of product, even you have to do a lot, generate more. So when you are generating more, are you sure the companies, the distributing companies are even ready to collect more because they don't even have the amenities to distribute what you are generating. So it's a big challenge. That's why I feel that them coming to the market in the first year, paying dividend, doesn't look good. There's something not really good with that. Because if you are having a company that is well managed, when you come into the market, you tend to have more cash because cash becomes king. So that will reduce your overhead costs, especially in the area of borrowing from others. So that's why I have a challenge.
Financials. Pat, the 2022, when we look at revenues for Geregu, down 32%, I think. And the revenues is down, I think, about 32%. Profit after tax, I think, down about 50% net profit. So this, I mean, is this not, this is part of the conversation that you raised in your article, that the performance wasn't really supportive of the fundamentals, yes?
Yes, thank you, Rotus. We all know what's happening in the power sector, right? Payments are not being made. Geregu has a lot of receivables on his books. So when they send the power out to the discos, there are a lot of financial and technical losses along the way, right? So it's a chain. So they send it out, then they have to get their money back, right? And a lot of times there are losses along the way. There's losses in transmission, there are losses in distribution. So, and then they also had a situation with the supply of gas from Shell due to a force majeure that Shell declared. That led them not to be able to fire their power plant in Kogi State optimally, and also affected their revenue. So again, the sector is a very difficult sector. You know, the discos, a lot of them are bankrupt, technically bankrupt. Let me qualify myself. So how are they going to get, how is Geregu going to get its money? And then, so that is why they had a 50% slide in their profit and 30% slide in revenues. So, so with that happening, I don't know how investors are valuing the stock, at 54 times earnings. It just doesn't match, what's happening with the books.
Thanks, Patrick. Muktar, the free floats, I think we've already mentioned this in this conversation. And just for our viewers, the floats is the amount of shares available
for investors.
For investors to the public, right? So we're looking at free float as of December 2022, 111 million. They're just 4.4% of the outstanding shares. So does this not tie into the narrative of how the price can be impacted?
Exactly. Like you just need 100,000 units to move the stock. And it has to be and like I said, when you put 100,000 units and you put a particular price, and any other person that wants to buy at that price will buy it from you, or anybody that quote lower than that, you say you are not going to sell. At the close of the day, it stands like that. Then the following day, you increase the price again, you put in another 100,000 units. And so it technically, like I'm saying, technically, it looks you are doing the right thing. But again, when you look at the fundamentals, when you look at comparable analysis, like he is saying, you look at is it worth it? You can get dividend yield of 16-point-something% in some other places. Why should I just come and stay at a dividend yield of 3.8? Geregu is selling about the price as today is about 207. But again, remember, don't forget that MTN also is selling at almost 200 and something.
Right.
Almost the same dividend. So it's investor's perfection. What do I want? What are my goals? What am I really driving at? Some people will feel happy to just have a share that is lifted to the power plant, believing that, look, this part of the business is still very, very virgin. You could still make a lot of money going forward. But some people could say, look at it now. I want to sit here. I go for those conventional ones that I know I can make money from. Then in the near future, if this Geregu is still doing good, I can still swap and go there. So it all depends on your perception. But then fundamentally, you need to do a comparable analysis and say, look, this is what I want to do. This is what I want to do. Okay, buys and that. Should I be buying MT or be buying Geregu? Or should I be going to even buy a Zenith Bank or a GT Bank? You look at some people, you look at some subsector. You remember there was a time that Wando was selling for about 100 naira. Today, Wando is selling for 5 naira. And we have a Sepla that was listed for 400 naira. Sepla is selling for 100 and something. They grow their earnings. We could see how they grow their earnings. We could see the boom when the oil sector started booming. We could see those rise. You could add it up to the fundamentals and you are getting the result. But when it comes to this Geregu, you need to really look. The only reason why any investor should be buying it is saying, I'm looking at the future. Because you are looking at a company that is just listed not up to a year ago, growing down in profit. And despite their non-profit, they didn't make so much profit, they are still paying you a dividend of 8 naira. And you are wondering, that means they have a lot of liquidity. Because if you have a lot of liquidity, then what is happening is that they have made so much money before, and they're removing this money from their reserve to pay investors, not really what they have made now. So, but then that's where I have a problem, because as a company like that, you know it's going to be capital intensive. Why would I not put more money into my reserve to grow my company than bringing out those money from my reserve to pay dividends? Pay dividend. Again, you need to know who are the investors.
They say, look, the MTN comparison is blowing my mind, because MTN closed at 245 naira, Geregu's at 207, and MTN just declared revenues that touched 2 trillion for the first time in the history of the NGX. Patrick, Muktar, thank you. Patrick, the top shareholder, we got to look at that, which is, of course, Mr. Femi Otedola. Through, is it Amperion is the name of the, I think we take a look at the top share, as far as I think it's 95% holdings. There we go, 95.56%, Femi Otedola via the Amperion Power. So he, of course, as chair, still holds a significant amount with respect to the stock. Is that correct, Pat?
Yes, the chairman of the company, Mr. Femi Otedola, owns 96% of Geregu Power. So he's basically paying himself, right? So the 96% of that 8 naira that was declared will be going to him, and it comes to somewhere around 19 billion or something like that. We did the math. So again, you have to look at it. Who, like you said, who are the other minority investors? So who owns the other 3.5%? Of those, or 4.5% of the shares, and how do they benefit from the declared dividend? But we know that the major person that's going to benefit will be the chairman of the company.
Thanks, Muktar. The receivables. I think we have the receivables for Geregu. I'm wondering if that is, I guess, an issue for analysts. I think it comes out to about 70-something billion if we take a look. So we got trade receivables 46.1 billion, and then I think there's another from the same Amperion as well, which is about 32 or so. What's your take? Any worries on the receivables?
Well, you know, like I said, with the result, there's a lot of worries. Whether with the receivable or with the profit after tax or profit before tax, there's a lot of worries in it. The fact that you are still taking out some of this, money to pay investors. If this was to be like a highly regulated sector, you know, you have to send this result to your regulators. Regulators will in turn look at the result. I'm sure most regulators will not approve such a result, because they will look at it that looking at the future, if you have to pay this much, how much will you be able to gain back? And then you don't want it to go into any issues. So definitely, I have a problem with the entirety of the results as a whole, in the area of profit after tax, the area of earning per share, and also the area of receivable and non-receivable. So it's definitely a result that is not supposed to excite investors, but like you saw there, like he has said, one person owns that amount of share. And if you look at comparable to what you put into you put in the chart, how much was traded in that particular day yesterday,
yeah,
it shows that the chairman himself must have been one of the people that are trading on his shares with that kind of volume that you have seen there.
Great stuff. All right. CEO of Finance with Muktar Muhammad, and also Patrick Atuanya, who is, of course, the publisher at MoneyCentral. Thank you both for this. We're going to be doing this more often, going in depth on the stocks on our exchange. Thank you so much for your time.
My pleasure.